Welcome back, Alpha Hunters. Okay, I hope you had a wonderful weekend, and it is time for another You Give Me a Stock, I Come Up with a Plan. So today on deck we got Dell, and where Dell came from is my boy John here, threw me out this lovely idea. So if you don't know who Dell is, D-E-L-L, this is the computer, laptop, monitor, accessory maker for hardware computer components. They do own Alienware. They bought Alienware a few years back, but they have transitioned over the past couple of years to get more into business services and solutions for their businesses, right? Doing cloud stuff, right? Cloud solutions. They are no longer just like a typical retail hardware computer manufacturer. They have been branching out into other areas that bring in that constant income and stuff like that. So what I like to do when I start out with looking at a stock is I do like to start out, especially the stock I don't know, I do like to start out with the largest time frame I can. Now, I would typically start out with a monthly chart, but this is all the data we got. So I'm actually going to start with a weekly chart so we can actually go ahead and see all the data it has. It had been publicly traded before this point, but they went private and now they're back being public again. And it was sometime late 2018 that they came back to being a publicly traded company. So what we can see here is we got a pretty good trend line that would have been a really good ride, really all the way up through here, something like this. That was a pretty good ride for it. So any kind of pullback along the way for this trend line was a good buy. And then once it broke that trend line, then you got to kind of come up with a new game plan. Obviously, it wasn't just going to crash. It's just that trend was just going to stop going up at that rate. So we got some more trend lines in through this area, or roughly something like that, like another little trend that set in. But as we go to a daily, and for you guys that know that follow and watch along with some of the videos and market analysis I've been doing, I'm not super bullish, especially on tech companies. Now, obviously Dell is a tech company, so I'm trying to figure out how I would best want to play this. We can see a nice little channel we got going on here. We got like a support down here, and we got resistance kind of up here in this level, somewhere around maybe the 59 to 60 level. You can even say it's maybe like right here in this area. We kind of get up to there twice. We broke through it pretty good up here. There's a little breakthrough, but we broke through it pretty good here, but we came right down through when the market had a pretty good pullback about 2 weeks ago. So that's not a bad channel. It's kind of new, but it is there. So when I'm kind of looking at this, there's two things we can do. We can use stock, and we can buy low in the channel, sell high in the channel, and just keep doing that. But my channel is not called stock trading. My channel is called options trading. So let's figure out what we can do with options to generate some returns, okay? So I'm trying to think of stuff off the top of my head. And really, I'd probably say, since we do have a clear channel, I would definitely want to say a condor type option strategy works pretty well here. Or maybe a really wide-ranging butterfly, because if it's in the channel, so another thing I'm actually noticing as we're looking at this, another thing is, and I try not to pre-do a lot of analysis because I want you guys to hear a lot of what I'm thinking about and not come off scripted and I already have a game plan and I'm just telling you it. I want you guys to hear what I'm thinking, okay? So I do try to remind myself to think out loud. But the what I'm kind of noticing here is anytime that it gets to this high end of this range, it kind of comes back to the middle, right? Because we were in the middle part of this range pretty good back in here. Obviously we went through it here, and it seems like we're kind of hanging out in the middle part of this range as well. So that leads me to think that maybe a wide range butterfly might not be bad with the peak in the middle here around the 56 point area. Might not be bad. Okay, so let's go see. And the cool thing about some of this is you can do this on a week out. We'll go look and see what kind of options Dell has. Try to see if we can come up with a game plan. But To do an options trade, it's definitely going to depend upon how good their options are. But that's be my game plan for now. It's hard to be directional in this. Obviously, we got this channel that's been going on for the past couple months. So, but anything I would be doing bullish, probably bullish verticals down below this line. And I'd be doing bearish verticals up here. So like that's where, the condor would kind of come in. But, maybe we can go look and see if we can get into a good butterfly type trade setup. I want you to leave a stock in the comments below and I'll come up with a trading plan. Okay, so we got Dell here. I have no idea what is going on here for these April options and June. Shares per contract and dollar value. So that's interesting. I don't know, maybe they had a split? Or these are really custom contracts that have only 44 shares. So I don't know, I've never seen that before, so I'll have to research that. If it's something interesting, I will have to let you guys know. I've never seen that before. So that is very kind of interesting to me. Okay, anyways, let's get back to it. So Dell Technologies, so they do not have weekly options. What do the options look like for... They only have monthly options, which is kind of a bummer. But they do have okay spreads, I guess, on their options. Maybe not the best option spreads. And if you're going to do a butterfly, the best thing to do is do it as quickly as possible. You don't want more time, because more time just leads to more variation of where it can go. So if we're going to do a butterfly, I would definitely say do it on the near term. So let's look at this. Man, 56 is right in the middle of this 55 and 57.5. So I would almost say the butterfly maybe even not happening. I do want to look and see maybe if let's look and see what the risk to reward setup possibly would be. Okay. 55, so I'm going to wind this out a little bit. I'll take that to 65. And then we're going to analyze this trade real quick. So if we definitely think 56 or so would be a pretty good point. See, like we would be risking about $460, right? $4.60 per share. So we'd be risking about $460. So I definitely would like a better risk to rewards. That 56 is about that middle point, definitely right where it likes to hang out. So the potential reward at that point at expiration is about $120 or so, $120 to $150, somewhere in that area. So I'm not really digging it. And if you want to know where I'm looking at the teal number that pops up here next to this date. As I kind of am looking there, I can look down at that bottom left and see the potential reward at expiration. And then the purple number, that is the reward for whatever day we're on, and I can move forward the day to kind of get a better analysis of what the value of the trade might be in the future. But I'm not going to worry about that right now. But I just don't like that risk to reward. So that leads me to doing potentially condors. I'll probably do iron condors. So what was that range that we were looking at for Dell? So anything above 53. So I know they had, so their options are every 2.5 points, right? So they're every 2.5 points for strikes up to 65, which is very important because that gets kind of close to that upper range. So every 2.5 points, which is really a bummer. Man, that's a bummer. Okay, so that definitely just leads me to believe that probably the best strategy to do here is probably going to be an iron condor. Okay, so what you're going to want to do is do a vertical, a bearish vertical up above the channel. So probably at the 60 point range, right? Because that's above it. And it's really right up here where the top of this channel, right here where the top of this area was. And then you could even do the 52.50 strike down here. So that way you're just outside the channel and you can really kind of watch it as if it gets close to the edge of the channel. If it starts to make a breakout, you can maybe just close that leg, leave the one that's higher up, that kind of thing. So yeah, I think that might be the best course of action here. So let's go look and see what kind of problem areas we can get into. We got a put that we would be selling that, buying that. So that would be the bullish put vertical. Okay, we'd be collecting the credit. And then the next one we would want to do is sell a call vertical. So what we would do is do a bear call vertical. So we got a bull put vertical, right? That's this lower leg. So we're selling the top option and then we're buying a lower one. That kind of helps us reduce our risk if the stock was to really just collapse. And then this top one, we're doing a bear call vertical. We're selling this lower strike call, right? We're selling it. You can see that negative one over here, selling it. And then we're buying a higher strike call. So that's not bad. We'd be collecting 57 cents. So we have a 2.5 spread between our strikes on the lower leg and the top leg, okay? So if we go into this saying, hey, the most we can lose is $250, okay? Now, let me go ahead and, I'm gonna delete this. So I'm gonna show you this real quick. So as we go into this trade, what we're looking at is to bring in $32. And so since we're gonna bring in $32 and we're risking $250, we have what we would do, and now $250 is our max loss, right? But since we're gonna bring in $32, that's actually not what we are actually risking, okay? That would be what we would have to pay out if, what is this, Dell got below the $50 strike and we got exercised, we'd have to give up $250. But remember, we are going to collect $32. So we would actually only be risking the other, what is that, $218. So that is what, right? 250 minus 32, 218, okay? So that is what we are risking. So we would be taking in $32 and we would be risking 218 of our capital. So that would be roughly a 15% return on capital. But here's where the condor really helps out, as we are going to look to add in another vertical into this equation. Whoops, I wanted to sell that one. And then we are going to buy. Okay, so we would look to bring in $49. Okay, so if we're going to bring in $49 now instead of 32, what we can do is take 250, right? Because that's still going to be the most we pay out either way, right? Because at expiration on 18 Feb, if it's outside the range of $50 to the downside or $62.50 to the upside, we would be forced to, basically a $250 obligation for the exercising of the verticals that we have on, okay? But there's only one side that would get executed, right? It's either gonna be the put side or the call side. It doesn't increase our risk for putting on the additional side, okay? So if you're gonna do this with puts, look to do this with calls as well, because it doesn't increase really your risk. The only thing it really does is kind of cap off potential upside or downside. So be careful on which stocks you're doing this on, but this will help bring in just a little bit extra income, okay? We'll take 250 and we'll go minus 49. That'll be 201, okay? So we'll take 49, because that's what we're looking to bring in. We'll divide that by 201. So now that is a 24% return in roughly about 3 weeks, okay? A few weeks, right? So I'm looking at February. If we pushed it out to March, we bring in a little bit more, but you're giving yourself more time for it to move outside those ranges, and that is not what we are kind of wanting to do. So this is going to really be a theta play, right? Because the options that we're selling are closer to at the money, which is where more time value is. So that is what we are looking to benefit from, is theta decaying away. So as we look at this, and it is right smack dab in the middle, so that is kind of what you want to see, but this is a pretty good setup for this month. And the other thing to kind of note is earnings is when are earnings? Earnings for Dell are going to be late February, but it's going to be after the expiration of this trade that we are currently looking at of 18 Feb. And when you get to 18 Feb, if you want to do it again, or whenever you get to that next expiration, if you want to continue to do it again, just reanalyze, make sure it's not, you know, breaching these lines or anything. And, you know, you could do this again. You know, and you can always, and that is one thing I typically like to look for. I like to look for strategies and options ideas that I can do continuously until the trend breaks or something like that. And then I look to reanalyze or just take off the whole position, cancel the plan, that kind of thing. But when you get to 18 Feb and they expire worthless, like, that'd be great. But just remember then a couple days later, on the following week, you're going to have earnings. So that just might be something to watch out for. And you can look at the previous earnings cycles, you know, how much earnings moved. This one just moved within the channel. It might not be bad to do this strategy for like March. So let's say we got to February 18 and they expire worthless. Okay, fantastic. Here's what you could do is you can go look at March options. 18 of March would be the next expiration. So if you come in here, what we can do is kind of game plan already. So there's be a $1 credit currently. The thing to know is doing this over earnings, it's a little risky. Yes, it is risky. So just understand and what you're getting into when you do this. But is the next options after earnings, so in this case it would be 18 March, they have extra inflated implied volatility because of that earnings announcement, okay? And not only is it during that cycle, it is like a couple days after the February options expire, the Feb 18 options expiring. So there will be inflated option premiums out there for the March option contracts. So you could potentially just do this over earnings, and if a lot of volatility actually got sucked out and you got that Vega collapse after post earnings, you could actually take this trade off, okay? So maybe if you got into the trade for $1 and then wound up closing it after earnings for maybe 50 cents or 40 cents, that would be another idea. But I think this would be a good setup to do until one of these areas break. And obviously we've broken it to the upside, and this is where if we break it to the upside and then we come back down in the middle, you probably put it back on. But the one to really watch for me here is the move to the downside, as I think here in the next couple months we'll see some more tech sell-off. I think for the near term it might be done, and it did get caught up in that tech sell-off that we had 2 weeks ago. So that is another thing to kind of watch, as if tech starts selling off again, Dell could also get hit as well. So those are just some things that I think you should watch out for. But I do like doing the February options for now. You can collect probably 45 cents and then look to potentially do it again as the Feb options expire. And you could do this rolling on for months. You know, as stocks get into channels, I mean, you could do option plays like this for months and just continue to collect that premium. And if you want to be a little cautious, okay, and this is not bad. This is not a bad thing to do. If you want to be a little cautious, if your options expired and it was close to this line, close to one of these support or resistance lines, you could just not redo the option that is that close, okay? That is perfectly fine, okay? So if it was close to this support down here, I would just say, you know, maybe for the next month, don't even sell the bull put vertical that you have below it, right? So the bull put vertical would be roughly right about here. So it'd be right about there. So obviously if it's really close to there, you know, if it breaks through that, well, most likely it's going to get below your bull put vertical pretty quick. So it's just one of those things, like, you know, you don't have to put it on. But if it looks like it starts to bounce off of that support again, I would definitely just go ahead and put it back on, because there would be quite a bit of premium as it's a lot closer. There will be more premium there, but you're just gonna have to be careful, watch it, and that kind of thing. You can also set alerts and triggers that say, hey, let me know if it breaks out of this area, that kind of thing, or stop losses. The way I typically like to do stop losses on this, I don't like to close out the whole trade. What I'll do is close out one side of it. So if it did break through this lower support area, I would close this bull put vertical. Absolutely. If it got above this resistance, I would close that bear call vertical that you'd have on top. Okay, because that's all iron condors are made up of, is two verticals, right? So you just close out one side and just let the other one expire, worthless. But I hope you appreciate this. This was actually a pretty difficult one, as we do have some challenges with this stock. One, it doesn't have a long-term history. It has a couple of years of history for trading. The other part that has a little bit of an issue is the non-abundance of options, okay? So you could also definitely play this with stock and just buy it low in the channel, sell it high in the channel, that kind of thing. But I do actually like to give some variety, especially with options, as I know a lot of people are new with options and just trying to understand, how they can use options to profit and make money. But I definitely wouldn't be selling options inside the channel. You want to do it a little bit outside the channel and just collecting a little bit of premium. And like I showed, if you do the iron condor, you could be collecting roughly, what was it, 25% in a month? I mean, annualized, that's, so if you're doing a 25% return times 12, that'd be roughly 300% return. Okay, that's annualized. So is it gonna do this channel forever? No. You never know when it's gonna stop. Just whenever it gets close to one of your options that you're selling, or one of the vertical legs that you're selling, yeah, man, just take it off, or just not put it on, that kind of thing. But if it breaks that channel, the channel's done. That's the main thing. You just want to find the trend and work within the trend and what the trend has established. Okay, so if this video was beneficial for you and understanding how to read the stock chart, come up with a plan, put on some options, ideas, and strategies, give this video a like. That way it helps spread it to more people that can hopefully benefit from these kinds of ideas. Alrighty, take care, Alpha Hunters.